Good morning, everybody. It's great to be here again. And in the next 10 minutes or so, I'm going to set the scene for today, which is, again, like an amazing lineup. So I'm very, very happy to be able to open that. So I'm going to talk about the state of European startups and VC. So yesterday, I talked mostly about Italy. Today, I'm going to more talk about Europe. And to talk about the state of European tech, I have to talk about the downturn that we're in. And actually, so tech continues to outperform the overall economy, despite there being a massive downturn, especially in tech, as you can see here. And it's continuing to going up and down. But the long-term trend is definitely that tech is outperforming. But shares are down across the board, and there's a big difference in the extent. So you see companies like Apple, Oracle, Intel that are down about 25%, and then there are a lot of stocks that are down 75% or more, especially companies that have been raising or going public through SPACs and these kind of things. So people are now much more focused on kind of profitability, and cash flow, positive cash flow. And so we're now kind of 10 months into this downturn. Here you can see multiples going down of software companies from a peak of about 25 times revenues. Now it's down to about 10 times for SaaS companies. And you can see that e-commerce, everything, multiples are down. But we're not there yet. So basically, every downturn, every severe downturn, has kind of 3 stages. And the first one is like a re-rating, which is what you see here. So people are just willing to pay less for the same amount of revenue. But most of these SaaS companies, and many of the best SaaS companies, are having record revenues, record growth. They're doing super well. But the next stage of a downturn often is profit warnings, and actually companies saying, hey, shit, actually, we are affected by this, and yeah, we're not there yet. Like, actually, governments are now deliberately trying to stop growth, and it's gonna affect even some of the best software companies that we know. And I saw that even Apple now brought out an iPhone 14 that apparently is like the worst iPhone ever. So we cannot rely anymore on Apple to save us. And then the next phase after the profit warning is when it gets really ugly. So that's when kind of skeletons come out of the closet. Turns out that some companies were like really not what we thought they were. There's going to be some bankruptcies. So that we're not there yet. But the good news is that public markets are forward-looking. So this could all happen relatively fast, and then we're kind of through all of that ugliness. So this was kind of talking about public stocks. Now I'm going to talk about the European tech sector. So if you look combined, all the public scale-ups, tech scale-ups in Europe have dropped about 32% in value, and now the total value is just under 1.5 trillion. So that's the combined value of kind of European startup scale-ups that have gone public. So it's still massive. If you look at private companies, it's very different. Like, the dynamics are very different. It's kind of more slow to respond. Not everybody has an incentive to reprice. But also new startups keep getting created, so they're added to the pool. So the overall kind of pie is still growing when you look at the European private ecosystem. So there is almost 2 trillion in value of privately owned European-based startups, and still growing. But if you want to get a more accurate view of kind of the current sentiment, one way to look at it is the creation of new unicorns. So this is a pretty stark picture. I compare Europe with the Bay Area so that you can see it's a kind of a global phenomenon and very much correlated. So during kind of the pandemic, during like the kind of peak bubble times of tech, you had, I believe, like 2 new unicorns being announced every day. And now that there's been a sharp drop-off, both in the Bay Area and in Europe, which is kind of back to normal, I would say. So what does that mean for venture capital investment? So here you can see venture capital investment on a global scale and on a quarterly basis. So again, there was this kind of peak during the pandemic, and now we're kind of back to pre-pandemic levels. But even in Q3, there's still kind of on a historical level, still a lot of deals happening. So we're kind of back to normal in terms of venture capital activity. So what does Europe look like? So Europe was in the beginning a bit like this, you know, this Roadrunner cartoon that just kept going after he fell off a cliff. But then in Q3, suddenly it did also drop back to normal levels. And now, yeah, Q3 was still, as you can see, a pretty active VC environment, but nowhere near the levels that we had in the previous 2 years. But if you look at European investment compared with the rest of the world, actually the share of investment that's going into European startups this year is higher than it's ever been. So this year, 20% of all the venture capital investment is going into European startups, and it has never been higher, as you can see. That's like the bottom blue part. And the part that's declining is mostly Asia, and within Asia, actually the part that's mostly declining is China at the moment. In early stage VC, Europe actually had its highest ever half-year period. So the first half of 2022 was a record in terms of early stage investment, with 18 billion being invested. And late stage, that's where the market kind of slowed down, which is what you would probably expect. But the market is a bit distorted. So if you look here, some of the money that's being raised is like startups that are quickly raising to kind of, you know, improve their balance sheet, extend their runway because they want to prepare for what's coming. There have been possibly also some rescue rounds, so kind of healthy, normal rounds. It's hard to say how many of those there were. For sure, this is a really interesting statistic. So debt financing among startups has become way more popular. So that's probably because startups are not able to raise at the valuations that they could raise before. So let's say you are a successful European software company, and last year you raised 100 or 200 million from a VC at a 30 times or 20 times revenue multiple. And this year, maybe you were able to double your revenues, but the multiple decreased 3 times, so you would have to do a down round, and most startups don't want that. So there's some alternative ways to raise money here. So now I kind of finished the update of looking where we are today, and now I'm going to look more at where it's going. So European venture capital funds, they also need to raise. Startups need to raise. VCs also need to raise to be able to invest. They've been raising record amounts of capital this year. And as you can see, in the first quarter, second quarter, about 10 billion was raised. In the third quarter, 6 billion, which is still a significant amount. So there is a lot of what they call dry powder ready to be invested. And then on top of this, US VCs and VCs also in Asia are also sitting on record amounts of dry powder ready to be invested. And Europe, in the meantime, has developed immensely in the last few years. So Europe today is home to 480 unicorns, and they're spread across 65 countries, 65 cities, sorry, and 34 countries. And as you can see on the map, it's really spread out everywhere. And we know from the data that once a city gets one unicorn or a couple of unicorns, then the flywheel starts to go, and they get many. You get a real tech city. So, for example, you can see there were 28 cities in 2014 that had one unicorn, and today most of them all have several unicorns and like have massive tech scenes within their city. So we also know that every unicorn, thousands of startups are being created out of it. And so yesterday I showed how Italy, for example, now has 6 unicorns. I think yesterday also someone mentioned that in France, for example, all the great startups have been founded by people that before worked also in a tech company that had some kind of success or failure, or at least for some reason it was a really valuable learning experience to work. So you have this kind of compounding effect that's starting to accelerate across Europe. And the nice thing about Europe, the thing that sets Europe really apart from the rest of the world, is that it's the most distributed in terms of tech. So tech is really emerging from everywhere. There is some concentration. Some concentration is also healthy and good. I will talk more about why later. But really, it's kind of a level playing field at the same time, and can tap into kind of different cultures and different values. And be more, be less isolated, where, for example, Silicon Valley can be also kind of a bubble. And I think that the nice thing about Europe is that the tech scene is less in a bubble. And building on that, you also see that the fastest growing ecosystems in Europe are the smaller ones, and places like Estonia, like Portugal, even Greece, Australia, Iceland, Switzerland. Italy is also up here, and actually Italy has had a really strong run in the last couple of months. So this is updated until the first half, but if you would update this until today, Italy would be even higher, around 1.7 times growth versus last year. And for example, if you look at the kind of rate of unicorn creation, Italy is also really up there, together with places like Norway and France. So overall, I would say that Europe really gets a second chance. Like, we're now in a massive downturn, but at the same time, like, entrepreneurial value creation is at an all-time high. New startups can create value faster than older ones, and tech is like constantly regenerating itself. There's going to be some big failures, there's going to be a big shake-up, and that's also an opportunity for young startups to come in and disrupt industries that we thought were kind of undisruptable. And today's entrepreneurs are kind of, they have often worked at another startup, and they're ready now to take on bigger markets than ever before. So Spotify, for example, was created in the media industry, which is actually a pretty small market. Even travel is a relatively small market, where, for example, Booking was created, or Zalando in fashion, etc. Now startups are going after groceries, they're going after education, which is like a massive, completely kind of untapped market, healthcare, housing, and insurance and banking. And you could add here also industry, which, like, if you look at the total manufacturing industry, that's about the 30 trillion market that is ready to be digitized. So startups today are addressing like some of the biggest challenges, like fighting disease, new ways to create energy and reduce pollution. There's also a record share now of VC investment that's going into impact startups. So today, 17% of startups are making an impact is like the core of their business. So they're working on climate tech, for example, or creating new medicine, fighting poverty. And we're entering now a new age. So the last 10 years are definitely different than the next 10 years. from quantum computing, we're seeing space tech, we're entering this kind of futuristic age. And you see that also in the numbers. So this year, for example, energy tech is the fastest growing tech industry by VC investment. So these are companies that are using AI to make wind more efficient. Yesterday, there was someone who was working on making AI itself more efficient and less energy intensive. And that's really what the solutions that we need right now. So the next decade will actually require ecosystems that can combine entrepreneurship, but also with a lot of capital, with long-term R&D, with this more kind of scientific, industrial mindset, where I think there are some very interesting places in Europe that are really well positioned to do that. This is one. This is kind of what we call New Palo Alto. So that's Amsterdam, London, Paris. And there is a lot of semiconductor industries. You have Oxford, Cambridge, like a massive academic footprint. So I think it's going to be really interesting to see throughout Europe which other places are well positioned to combine kind of this startup mindset with corporates that are willing to take big risks and attack some of the world's biggest challenges. And I think, for example, Italy would be really well positioned for that. So that's it. Thank you very much, and enjoy today.